But I'm going to go ahead and get started. So, welcome to today's Monday morning mortgage update. My name is Sean Woolen with the Woolen Mortgage Team, and we've got a lot of news today. As you know and have heard, rates have come down, but today was an interesting day. So, we're going to go over that in just 1 second here. So, let's jump right in and see. First off, I want to talk about VA loans. So, we have a lot of military action going on. So, how does VA loans fit in, and how can we kind of uncover the secrets and the myths of the VA loan? So, I want to go over a few things that a lot of things people don't understand about VA loans. It's actually my favorite loan. So, before we get into what's happening with rates, I want to go over this real fast because our armed forces are fighting hard right now, and we're going to honor them with the VA loan review. So first off, there's some myths. A lot of people think VA loans take too long to close, and that is absolutely not. It's exactly the same process. The only thing that is a little unique as the VA appraisers have up to 10 business days to send in the appraisal once it's ordered. So that's the only thing that could take some time, but they have 10 days. So they're under a clock. The next one is that VA loan require down payment. A lot of people still think this. No, zero down, obviously. VA loans are 100% financing and no down payment is required. You can only use the benefit once. No. In fact, you can have two VA loans at the same time. It's called residual or secondary benefit. So if you have, let's just say, a $400,000 VA loan, you can get up to the maximum conventional loan limits in zero down financing. So you can have another 400,000 plus in a secondary VA home if you're buying as the primary residence. So not a lot of people understand that, but it's a really cool feature. So you can have multiple VA loans at once, or you can reuse it over and over again as you buy and sell properties. So that's the fun thing about the VA loan. Only for primary residence, though. So a lot of sellers try to avoid the VA offers, and I think it's a disservice. I think it's rude, to be honest. But VA loans are very easy. They're super simple. The only issues that we typically see are appraisals on safety issues, but FHA has those same things. So as long as there's no safety issues that are going wrong, it's actually a very good loan. And then you need perfect credit. No. In fact, you can have terrible credit and still do a VA loan. VA loans are one of the highest performing loan of all of the loans, believe it or not. And a lot of people think you can only use it the first time, or first-time home buyers can use the VA loan. That's not true. Anyone, you can use the VA loan over and over and over and over again. And then the VA is the lender. A lot of people think that they're literally getting the loan from the VA, that the VA is the lender. That is not the case. They just guarantee the loan. They have nothing to do with the actual loan process itself. So lenders like myself handle everything. And then only on single family homes, nope. You can get condos, you can get townhomes, you can get multi-unit, you can get manufactured homes. They're for every type of home out there. And then another myth is a 620 credit score. Some people say 580 credit score. Well, guess what? There is actually no credit score requirement for VA loans. So that's a total myth. Now, this is how we calculate the actual approval. It's not based on debt to income ratio. It's based on what's called residual income. So if you look at this chart, let's just say we're in the, let's just call it the West. So let's just say I'm married. My wife and I are on the loan. That's all we have. So you would go into the family size of 2, go all the way to the West, and that $823, that number means that after all of our bills are paid and our mortgage is paid, as long as we have $823 left over, we qualify. So I've had people up to 80 debt to income ratios getting approved for mortgages with the VA loan because it's not based on debt to income ratio solely. It has to do with the residual income. So interesting. I didn't know if you know this or not, but this is something to really take advantage of because VA veterans have a great loan through a VA. One of the best loans on the planet, my favorite by far. So let's get into current mortgage rates because we've got some news overseas. Operation something's going on, Fury or something like that, with Israel and the United States attacking Iran. It's been some quite heavy fighting over there. What did that have an impact on rates? What is it doing to rates? Well, here's what's happening with our mortgage-backed securities. If you see here, this candlestick right here, we went above it. We went above this Fibonacci level of the 100.38, and we stayed there last Friday. We thought we were going to go all the way up higher, but this war broke up and fear over oil inflation, and now we have rates getting worse by about an eighth, a full eighth, or even more today in rate. So I always talk about this. This line right here is a really hard cookie to just pierce through. It's a hard wall of resistance. We tried to get it through here. We tried here. We tried here. If you go back over the years, and I'll show that in a minute, it's only gone above this a few times, and it's only for a day or two. So that 5.99 rate is elusive. It's only there for like one day when it comes. So if we're trying to time the markets, not a good idea. Here's the 10-year. You can see we bounced off the 3.947. We were under 4, and then now we're way above it. So that today we screamed a lot higher. So not a good day for mortgage bonds or for the 10-year, but it is what it is. Here's the postings for Friday. This is how we ended the day, 5.99. Well, guess what? It's not going to be 5.99 after today. In fact, when rates came out this morning, they were already out 6.125 to 6.25. Just a bad day overall for rates. Hopefully we will rebound, and hopefully we will rebound, because that would be great, but we'll see. Most of the time we do rebound from things like this that are going through the military, and I'm going to show you a little bit about that. So if you look at the military operations that we've had over the years, in 2020, on January 3rd, when I'm trying to remember the name of this one, but on January 3rd, we had an attack on another country, or a little war that was starting, operation, so to speak. And we went from 1.79 on the 10-year, we went up 10 basis points to 1.89. Oh, there's my car beeping. And then in a week, we rebounded back. So it's a big spike, and then it came back. And then in 2023, on October 6th, we were at 4.7. We went up 30 basis points because of the oil spike, and then came right back down right after that. So the trend is it's a spike and it comes back. So hopefully that will continue, and we'll see, because that's going to be really, really important. So this is what's going on this week. We've got ISM manufacturing today. We have on Wednesday, we have payroll, ADP. That's going to be really interesting. And then we have Challenger job cuts on Thursday. Initial jobless claims. We have the BLS jobs numbers. We have unemployment on Friday. That's always going to be an interesting one to see what really is happening there. So I'm hoping we can get a rebound from this, because it was a rough morning. Very rough. But I want to thank you all for joining today. And I appreciate you logging in and watching our updates. Hopefully we'll get some rebound. Hopefully rates will come down under 6% again. That would be great. But until then, have a wonderful week. Have a wonderful day, and we will talk soon.